Good day. Ira Epstein of Linn Associates with your metals market update, and this is your wrap-up for Tuesday, January 14th, 2020, and we're just after 5:05 p.m. Central Time, which means we're open already. Remember, they open the market Chicago time, Central Time, at 5 p.m., so we're into the next session. Copper slipping back a little, not a surprise. We're hearing that the tariffs don't come off the way that you think. Bloomberg had a big report today as to what's not. You heard what I just said. What's not in the trade agreement details, but's in a side agreement. Now, how they know some of this, I don't know. But it appears that for the first 10 months, certain tariffs plain don't come off that we thought might have been coming off. The stock market's now having to deal with that. And after the election, the president will decide, going into that part, is China met its obligations? Should other tariffs come off? Should they go back on? Phase 2, where's that been going during it? So the U.S. has somehow managed to really keep China's foot to that. At the same time, is it as bullish for the stock market as we were thought? I don't know. Then we get the USMCA, that's the Mexican-Chinese deal, not Chinese, Canadian deal, USMCA deal with the United States. And now we're hearing from the Senate that they are prepared to vote on it this week. So I don't know the day. I think they want to get the impeachment articles, as Mitch McConnell has said, all the way through, delivered to them. And then they're ready to take up the vote. These are positives one way or the other. At least we're ending a lot of this. But in the metal markets, we got down to some numbers that I think were important today. So let's go right there. For the week, we're down $13 on a weekly basis in gold. Now, it's only Tuesday. We have another 3 days, and there's a lot going on that. Tomorrow's the signing of the U.S.-Chinese trade deal. Then we're going to get the USMCA deal, hopefully brought up and maybe passed. And then, of course, the impeachment begins. There's a ton of market sentiment going to come with that. As you can see, gold peaked off the missile day. That's what I've decided to call it, MD, missile day. And that was, of course, when Iran fired the missiles at the U.S. You filled gaps in the chart. You've dropped down. The pattern is still bearish. You still have a pattern of lower highs and lower lows in the marketplace. Still in the bear camp. Where's the 18-day average of closes? Right here, the red. So this number at 1538, to me, is a number that I thought the market was going to make a run to, that fits in with the gold report that comes off tonight on our website. So if you haven't watched my gold video, you should, because I talked about this and I think that you'll get some ideas. And by the way, I've put up a gasoline video now. So I did another special report, and next week I'm going to have more reports coming out. Also remember, if you go to the website and you're one of our paid subscribers on our research, in terms of videos or my full research, you have access to my Spider ETF video. Today's day 2 of it, and this one's really complete. I went through everything. So as you're looking at the market coming down, I'm looking for support between this 1538 and the 1542 area, right in that zone. Does the market have to get down there? Of course it doesn't, but until you take out 1570.30 on this current pattern, the trend is down. The market had its breakout from this sideways action back here. I think you see that part. I hope you do. And it eventually broke out. Now, when you get really narrow in Bollinger Bands, one of the things to remember is they can stay narrow for a while. And a while could be months. But when they break out, and they inevitably break out, and that's because price forces will drive a market up or down, and suddenly you break out of them, people that are wrong-sided get hurt. And that's what happened there. And it led up right up to the crescendo of missile day, and then the market, as the taunt sort of set in, came back down. Momentum pointing down, and you know what I'm going to tell you. When you have what's called an embedded reading, it's when the slow stochastic numbers, the two numbers that make this study up, called a K line in red, a D line, and the only difference in them is on a daily chart, the K line, the red uses 3 days worth of data, the D 5. That's the whole difference in the formula, which means one of the lines is slower moving than the other. I hope it makes sense to you. And when you get that particular scenario out of it and you lose that reading, unless it's regained immediately, the odds favor that price, momentum, in other words, momentum is going to lead price into the downside. Here it didn't come back, so that's 2 days. Often, I want to use the word often, not always, because that's factual. Often the price makes a run at each other, but they don't have to hit each other. More times than not, if you go on your chart and you run this study, you'll see that they do. So we're in the process of making the run for that number. I like to use the word O. I think the market O is hitting it, and from that point on, my antenna go up. I'm looking to see, is the market run its course to the downside? We have the same issue at work in GLD. Now, let me come back to this and make it work for you. Here's the market, and both numbers were still over 80, and this was on Friday. Yesterday, you lost that reading. One of the numbers went to 75, and today it didn't get back over 80. Therefore, you've lost the embedded reading. Often, that leads to price and the 18-day average making not only a run, but trying to hit each other. That thinking would go wrong. I'd have different antenna up if you take out the most recent high here or you take out the 15-70-30 there. In terms of the gold-silver ratio, the market still favors gold over silver. And you see that on the differential. The higher the number goes, in a perfect world, this is how many ounces of silver it takes to buy 1 ounce of gold. Now, I'm not taking into account the commissions and everything that you take it to your store and they want from you. This is just one price divided by the other, and it tells me that silver is not as strong. When I come to the GDX, the gold miners made your run to the 100-day average. I think that's where the first support, maybe major support, is going to be seen in the market. That's to be determined. But the trend is down. You've hit a target. Now, if this doesn't hold in any way, then wherever this lower Bollinger Band comes in, that's the next target. Momentum is still down. There is no reason to be bullish this market that I see. Even if you ran over 28.56, you'd have a lower low, higher high. I don't see any setups there. In the juniors, it's the same. They have not been weak enough to get down to the 45 or the 100-day as we look at it, and momentum's still down. In the silver market, the 100-day average is what I mentioned yesterday. This is what we looked like yesterday. Let's get to it. This is Monday. If the market falls, potentially the 18-day average first target, right under it because they're so close, the 100-day. This is what you did, and this is where you're at tonight. So the market's still very much in a downtrend. The bias is down, trend is down. You are in oversold territory already. This could be an area that the market decides to get some legs under it. Is there a buy signal? None. This could be an area where pros, the guys that were contra-trend trading because you're over the 18-day average, might be pulling in some position. In the copper, I'll stay with what I know. One of the things I teach you is that the first challenge of hitting Bollinger Bands is often where pros take some money off the table. So here you are in a market that's coming up in anticipation of at least the signing tomorrow of the U.S.-Chinese deal, and hopefully, got my fingers crossed, we get the USMCA deal. Market goes up yesterday, hits the upper Bollinger Band. Today, the market up another 125 points, but now you're starting to roll to the right. You're overbought, not embedded. This is where I think some money is coming off the market. The trend is up. On pullbacks, I look for support, but that's what I'm thinking right there. I don't see anything on the signing of the U.S.-Chinese deal to be bearish. The scary part is we just don't know the details, and they're not going to tell us everything. They're going to tell us what they want us to know. Platinum overbought in an uptrend. Does it have the strength to get to the upper Bollinger Band? I have my doubts simply because it's overbought. Overbought conditions correct themselves in one of two ways. Either price drops and they start moving down to get away from that, and or both numbers get over 80 and they lock in, which I call embedded. It means the trend is getting stronger. It converts itself. Neither number is really over 80, so you're not at that point. And the strongest of all the metals, I'm a broken record, been this way for a long time for you on this, is the palladium. New all-time highs again. got over the band, back under it, perfect. Classic trading, back up to it with an embedded reading. There's just nothing bearish there. And if you think about it, a shortage of that metal, U.S., China signing a deal, maybe both economies do better. What metal's in short supply? That catalytic converter metal. In the dollar index, if this market decides to step back and take out 97.02, you step out of the uptrend that we've had. I was hoping to see the market get up to the 100-day average, be a little more classic for that. But if it does decide to step down, look for a fast test of the 18-day average. You're in overbought territory right now. As I said, I did an energy report for you today, and I did the gasoline market. Now, you might say, why? And the reason is, often, I'm never going to use the word always because it doesn't work out that way. Often, in the month of February, gasoline prices start up. We're already mid-January. And people think, it's wintertime, it's not going to go. Go look at the seasonals. And what I did for you, I put the seasonals in that go right on from now through May. Then I carry you with price counts. I'm going to carry, it's another chart that gives you an idea where markets may go. And this market has met its first upside target, so I don't want to give you the impression that bit of a rally didn't happen. It happened. Now the market's in the pullback, and this is where I think it gets quite interesting. If you haven't seen it, do so. This is available on our website. All you need to do is go to www.iraepstein.com under the word research. You'll see we still have our metal report up until midnight tonight, then that slips off. And you'll see the gasoline report. It's there to view. I hope you enjoy it. I'm Ira Epstein. You have a good day. I'll see you tomorrow.